Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to the closing bell. Here to help take us beyond the bell is our global simulcast with Tim Stenovec, Katie Greifeld in for Carol Massar today. And we welcome our audiences across Bloomberg Television, Bloomberg Radio, as well as on YouTube and on Quick Take. A lot of movement here today, Tim, in the equity markets and, of course, in the bond markets as well. But right now, you're looking at stocks right around the lows of the day, particularly when it comes to the NASDAQ 100 and those big cap tech names.
Yeah, perhaps a little surprising for people who tend to think that, okay, investors are sitting back and waiting for what we see when it comes to those non-farm payroll numbers tomorrow, but still seeing, the S&P 500 down more than 8%, but the real loss is happening on the NASDAQ, Katie.
It is interesting. I mean, after the S&P 500's worst Fed day performance since January 2021, to see a continuation.
You should write an article.
Since 2021?
You should write an article.
2021. Wow. I did. It was great. Everyone read it. Go check it out. But in any case, it is interesting to see sort of that conviction carry through into the next day. Usually you see a reversal this tightening cycle. Not today, though.
Take a look at two-year yields. You're now up 9 basis points on the day. We've been creeping higher. It was 6, it was 7, it was 8, it's 9. Now at a 471. So really the highest yields that we haven't seen since 2007.
What does that yield curve inversion tell you? The further inversion, I should point out. We got down to, what was it, negative 58 or something on the day here. What does that tell you?
I thought our guest from Loomis Sales said it really well, that it's signaling that eventually there is that mistake, that eventually there is a harder landing, and it's a market that's trying to figure out how hard that landing is going to be.
Today, we landed hard on the benchmarks.
Absolutely. And one thing I think is interesting, too, about some of the equity down days that we had over the last 3 days prior to this and even before that, was that on those days that we were in the red, you still had the number of stocks in the S&P 500 that were higher outnumber those that are lower. That is flip-flopping today with about 300 names in the red. The S&P 500 going to close lower by 40 points or 1% here on the day. The Dow Jones Industrial Average down about 0.5%. The NASDAQ Composite down almost 2%, 1.7%. And the Russell 2000 that had been one of the bright spots here, as a lot of people did try to sort of rotate back into some of those smaller cap and some of those cyclical names, lower by 0.5%.
We just spoke with Mona Mahajan, senior investment strategist over at Edward Jones, and she predicts volatility between now and the end of the year, Taylor, but she could see some opportunities post-midterms because she talked about the seasonality and the trends that we tend to see post-midterm elections.
Really interesting. Let's take a look at where we are in terms of the individual sector level here, as I know that we're waiting some of the other quarterly results that will come through. It is what is old is new again. Take a look at this. It's energy, it's capital goods, it's materials, it's transportation. Those are the sectors within the S&P 500 that are leading the gains today. To the downside, though, as you can see there in the red, it's the same story. It's media and entertainment, software services, technology, and hardware as well when you think about the big tech laggards on the day. I think I just want to get to quickly Expedia, Katie, and then we'll come to you as well. When we got the great numbers out of Booking Holdings yesterday, third quarter gross bookings now out of Expedia look a little bit light. 23.9 billion. Estimates had been for above 25 billion. All the way down to the bottom line, again, a small miss. Third quarter adjusted EPS of 405. Estimates had been for 407. And Katie, finally here, third quarter revenue, maybe just right here on the nose, 3.6 versus estimates again of 3.6. But clearly less of a big winner than we got from the booking numbers yesterday.
Yeah, and you can see Expedia shares moving lower post-market. Let's get to some of the gainers, though, because there's a few interesting stories I want to highlight. Peloton, how about it? Revenue forecast was weaker than expected. You had Wall Street spooked about the company's cash burn, but somehow the company ended up 8% higher. I'm not exactly sure why. You did have the new CEO, Barry McCarthy, come out and say that the turnaround, it's a work in progress, but the ship is turning. Maybe that explains some of what's going on here. But in any case...
Yeah, I'm just going to interrupt you. Sorry, Katie. Just some more breaking news. This is actually on Canada. We don't pay a whole lot of attention to their budget proposals, but this one is interesting. Canada is going to impose a 2% tax on stock buybacks. This would actually go into effect in January of 2024, so more than a year from now. But a significant move should this sort of go through to kind of bolster the country's budget, and more importantly, to address, I think, some of the issues that we're also dealing with here in the United States with regards to at least how the government views some of these buyback trends. We'll keep an eye on that, but we do want to get back to some of the movers and some of the earnings crossing the wire, Tim.
Yeah, well, let's go to some of the decliners right now. I want to talk about Amazon because the company's shares closed down 3.1%. It's its longest losing streak going all the way back to 2019. Think back to last week when the company reported its slowest growth for the current quarter in its history. That has spooked investors. The company over the last 7 days, has lost 25% of its market value and has fallen below $1 trillion in market cap. Paramount Global finishing the day down today, down by 3.5%. It did fall more than 12% yesterday after profit and sales fell short. But at least today, what we're seeing is at least four firms cutting their price target on the company. And then Shake Shack, it's an inflation story, reported earnings this morning, shares falling 8.2% today. The company did say that it expects, quote, modest ongoing pressure to our Shack level operating profit margins for the next several quarters.
Let's get to what is a story of cross-asset moves and basically everything under pressure. If you're looking in the sea of red that is the commodities space, that on the back of a stronger dollar. Now, we are seeing some little bits of milk is on the upside, you'll be pleased to see, and heating oil. But in general, oil is on the lower side, wilting under the pressure of a worry about growth. We see WTI off by more than 2%, Brent off by 1.7%, and then go across to the FX space. Everything in the red apart from Bloomberg Dollar Index that is stronger to the tune of 0.6%. I'd train your eyes to the second one there, the British pound up by more than 2% on a day where they hike by 75 basis points in the UK as well. The first time they've done that since the late 80s. But they're more worried about the growth trajectory of the UK and more worried about a Federal Reserve that remains so much more hawkish vis-a-vis the rest. Sovereign bond yields pushing higher across the board, whether in Germany, France, Denmark. Interesting comments, of course, coming on inflation from ECB's Lagarde a little bit earlier.
Still getting and waiting for some big results out of Starbucks. In the meantime, of course, take a look at the yield story. This was such a full faith and credit kind of day. Again, coming off of the huge comments that we got from Jay Powell yesterday, it is a 2-year yield that, again, resets higher. I think we're higher now for about 5 straight days, I believe, Romaine, as I know that we're getting some Starbucks shares. But it is also a big inverted yield curve as well under pressure.
Yeah, Starbucks earnings crossing the wire right now. Their fiscal fourth quarter comp sales, they were up 7% here. Overall, the street was looking for 4%, so a big beat there by about 3 percentage points on comp sales. As far as the revenue, it's coming in at $8.41 billion, slightly higher than the 8.3 consensus estimate that the street was looking for here. Now, of course, we know the international story has not been good. International comp sales were actually down by 5%, but that was actually a little bit better than what the street was looking for. 8.3% is what the street thought they were going to hit. So overall here, the story for Starbucks appears to be the same. Overall growth, a lot of weakness in the international segment, but enough going on here in North America to compensate for some of the international softness.
Yeah, really interesting to hear. Really interested to hear from executives on the call about what's going on in China. I do want to point to what Howard Schultz, who is back for a third time as interim CEO, he mentioned partners in the earnings release. That's, of course, people who work at Starbucks. He said, reinvention will touch and elevate every aspect of our Starbucks partner, customer, and store experience, and ideally position Starbucks to deliver accelerated, sustainable, long-term, profitable growth and value creation beginning in 2023. Yeah. He has been on a mission to work with the partners at the company as there has been this labor movement across the country to unionize those workers.
Let's have a little look at what's the artist formerly known as Square, now called Block. Third quarter adjusted earnings per share coming in at a big beat, 42 cents. The estimate had been for 22 cents. Adjusted EBITDA coming in stronger. Net revenue, $4.5 billion. That's basically just ahead of expectations. And the transaction revenue coming in line with $1.5 billion. This is a company that's adding subscribers overall, a revenue beat, and we are really seeing the shares up 4% after hours.
I want to also jump in here on Coinbase as well, Caroline, as we await some of those numbers. Right now, it looks like we're getting just the revenue numbers. Looks like a little bit of a miss here. $590.3 million for third quarter revenue. Estimates had been for almost $650 million as well. So we're going to continue to dive into the press release, but for now, it looks like a little bit of a miss here, Katie.
A little bit of a miss, but still you can see Coinbase shares up 1.2%, now up 2% or so. So it'll be interesting to see how that changes as we get the drip feed of those earnings.
And I think, and just real quickly, too, I mean, we did get a couple of smaller earnings, and it gets to the broader picture. When you have a company like Atlassian missing the idea that software spending would be resilient, those shares down 11%. And then you had Skyworks also missing on its forecast, and those shares down a couple of percent. So a big read here into the smartphone market, Caroline.
Yeah, it's notable, isn't it, that we're starting to see some of these companies. We still await PayPal. What is the consumer saying? What does an activist investor do for that particular business? But the fact that in fact, we've been watching the IBMs and some of these corporate-focused businesses do rather well. The fact that we aren't seeing that with Skyworks and the like. We're looking at Block overall, and in third quarter 2022, they are saying they saw a gross profit up 38% over year. Cash App generated gross profit 774 million. That's up 51%. So still, when you're looking at an SME, that's doing pretty good, as well as peer-to-peer transactions.
All right, the earnings story not quite done. As we mentioned, we are still awaiting some companies. We'll bring those to you live as they do cross the Bloomberg terminal. In the meantime, that is going to do it for our Beyond the Bell coverage. Tune in tomorrow, same time, same place, available on Bloomberg Television, Bloomberg Radio, YouTube, and on Quick Take.